MGM's empire casts a long shadow over the Las Vegas Strip, with legendary names like the Bellagio, Mandalay Bay, Luxor, and the MGM Grand. But recently, a storm has been brewing as the company finds itself under fire for a relentless series of price hikes. We're talking resort fees, parking, and they're even nickel and diming you on things like ATM fees. Now look, we all know that paying too much at a hotel minibar is practically a tradition, but just how high is too high? The Aria Hotel drew a line in the sand, sparking outrage online after a blog post went viral about a $26 bottle of water in its minibar. But as you can imagine, not everyone on the internet thought the anger was justified. Emerson Drews, a business reporter for the Review Journal, dug into some of that backlash. It turns out, plenty of people were actually criticizing the original poster. They were saying things like, hey, just walk to a convenience store or a gas station if you want cheaper water, or even, just use the tap. All the while, MGM Resorts International, the company that actually operates Aria, stayed completely silent, offering no immediate comment when asked about the controversy. But these kinds of increases, happening all through 2024 and into 2025, have been feeding a growing narrative that MGM has simply become greedy. And all of this is happening at the worst possible time, as Vegas tourism itself is starting to slow down. It really makes you question just how sustainable a strategy like this can be. In fact, critics are constantly comparing MGM's whole approach to that of a budget airline. You know the drill. They lure you in with a seemingly low price, and then they just pile on one hidden fee after another until the final cost looks nothing like the great deal you thought you were getting. MGM has been methodically raising prices across almost every single one of its Las Vegas properties, which is exactly what's fueling this whole story of corporate greed. These hikes are hitting everything from the resort fees you have to pay to parking your car and even taking cash out of an ATM. And the craziest part is, most of the time, these price jumps come with almost no warning, sometimes happening multiple times in a single year. In late 2024, for instance, MGM jacked up resort fees across all of its strip hotels for the second time that year. Then, starting on December 4th, those daily fees leaped up yet again. So now at premier spots like the Bellagio or the Aria, you are now looking at shelling out over $50 a night just in resort fees. And that's on top of your room rate. This is for so-called amenities like Wi-Fi and gym access, by the way, whether you use them or not. And parking costs? They followed the exact same upward trend. Self-parking now sets you back $20 during the week and $25 on weekends. Hotel guests pay a flat rate of $20 per day, while valet parking can climb all the way up to $40 a day. Plus, they'll hit you with another $40 for each extra day if you happen to go over that 24-hour period. Even the ATM fees have been quietly creeping up. MGM admitted these were all part of a revenue optimization strategy designed to offset their operating costs. But here's the major catch. In a city that was literally built on competition and giving people a deal, these never-ending added costs risk driving away the exact mid-market travelers who used to see Vegas as their go-to affordable getaway. You can see it all over traveler forums and online reviews. The frustration is growing. A lot of visitors are now cutting their stays short or just skipping MGM Resorts completely, choosing cheaper off-strip hotels instead. But even with all these price increases, MGM's financial report card in 2025 has been, let's just say, a mixed bag. On October 29th, the company released its third quarter earnings. The big number, consolidated net revenue, clocked in at about $4.3 billion. Now that's up 2% year over year, but that top line growth was hiding some pretty serious cracks underneath. The company posted a shocking net loss of $285 million, or about $15 per share, which is a massive reversal from the profit of 61 cents per share they had in the same quarter last year. And if you break it down even further, the Las Vegas Strip resort segment, their bread and butter, saw its revenue drop by about 7% to roughly $2 billion, and its adjusted profit declined by a painful 18% year over year. The one silver lining in all this? Their joint venture, BetMGM, is still going strong. For the time being, MGM stock has stayed relatively steady, and you'll still find some analysts who argue it's undervalued. But the biggest issue here is how incredibly dependent the company is on Las Vegas. And this last quarter's data is a flashing red light, suggesting that the entire strip business is under some serious pressure. That drop in the Las Vegas segment's revenue serves as a huge reminder that just jacking up room rates and the price of food and drinks isn't enough on its own to solve demand problems. The bottom line is that while MGM has still seen some growth, the core profits from their resorts are becoming a lot more fragile than they appear. These higher prices are looking more and more like a temporary fix for a much bigger problem. And then, in September, MGM joined a citywide event called the Fabulous 5-Day day sale, which was a massive promotion aimed at trying to breathe some life back into Vegas tourism. Running from September 22nd to the 26th, it was packed with deep discounts. We're talking up to 50% off rooms, waived resort fees, free parking, and daily credits for food and beverages. MGM Rewards members were able to get up to 35% off their rooms at select resorts. On top of that, they were getting $100 in daily food and beverage credits at high-end properties like the Bellagio and the Cosmopolitan. Across MGM's 13 hotels on the Strip, you could find deals starting as low as $24 per night plus fees, though in many cases, even those were waived. The whole campaign was pushed heavily online, and sure, it definitely helped fill more rooms, but it was only a temporary solution. You see, a lot of people called it what it was, a desperate move after years of jacking up prices. And the reviews? They were all over the place. Sure, some folks were thrilled with the discounts, but others, they saw the catch in the fine print. We're talking extra charges for little things like checking in early or sleeping in late. In the end, it was just a band-aid solution, and it did nothing to fix the real problem of being wildly overpriced. Now, fast forward to 2025, and the storm clouds are gathering over Las Vegas tourism, with MGM's properties feeling the full force of it. Visitor numbers took a nosedive, dropping 11.3% in June compared to 2024, and the story for the whole year shows arrivals down by more than 11%. Hotel rooms that were once packed sat empty, with occupancy falling by about 6%, and the average daily room rate on the Strip sank by 5.1%, bottoming out around $193. It got so bad that MGM's own CEO had to publicly admit to the slump, pointing to 7 straight months of fewer visitors, which included a staggering 12% drop in July alone. The places that got hit the hardest were the mid-tier resorts, your Excaliburs and Luxors, because the younger crowds just weren't booking rooms there anymore. And what always follows? Layoffs and slashed hours for employees, putting an immense strain on the local job market. I'm telling you, even the high-end spots like the Bellagio started to feel eerily quiet. It didn't help that fewer flights were coming into Harry Reid International Airport, and honestly, other destinations were starting to look a lot more attractive. So while MGM is still technically making money, its entire Las Vegas division is clearly in survival mode, leaning on discounts and cost-cutting instead of actual growth. If MGM wants to have a future here, it desperately needs to shift its focus back to locals like myself and to travelers watching their wallets. There are over 2 million of us living right here in Clark County, and we are a reliable customer base, one that isn't so easily shaken by what the national economy is doing. MGM could win us over with some real local deals on dining, entertainment, and a little action on the casino floor, especially during those slow midweek lulls. And for the budget travelers, it all boils down to one thing: transparency. Stop burying them in an avalanche of hidden fees. Just imagine if MGM offered straightforward all-inclusive pricing or value packages, affordable rooms with the basics, but with premium options available for anyone who wants to splurge a little. Teaming up with budget airlines or even some of the cool off-strip attractions could be a genius way to connect with price-conscious visitors. Because right now, the younger travelers, especially Gen Z and millennials, are ditching Vegas completely for cities that won't break the bank. A marketing campaign that screams amazing experiences at a great price instead of just luxury could be the key to winning them back. By just easing up on the relentless fee increases and actually rebuilding some trust, MGM could get that loyalty back and fill its rooms without resorting to desperate discounts and last-minute sales. MGM's current playbook might be bringing in some quick cash, but it's absolutely tarnishing its image and could very well be sabotaging its long-term survival. The 2025 tourism slump really pulled back the curtain, exposing just how fragile that charge more for everything approach truly is. And yes, having ventures like BetMGM keeps the profits looking okay for now, but a true recovery is going to mean rebuilding goodwill with fair pricing, smarter marketing, and forging a much stronger connection with both locals and budget travelers. If the company keeps chasing revenue at all costs, it risks alienating the very people who make Vegas what it is. A city that was built on a promise of fun, accessibility, and pure, unadulterated excitement. Thanks for sticking with me through this. Be sure to subscribe for more breakdowns just like it, and I'll see you in the next one.